Welcome to the lesson of the day. Do not let an anchor weigh down your P&L and weigh down your trading. I want to talk about anchoring today, one of the worst and most difficult cognitive biases to have to overcome, not just in trading, in life. It probably affects everybody. You just don't realize it if you're not familiar with it. So, hey, what is anchoring? It seems as if there's a million definitions for it, but in the trading sense, it comes down to one basic principle. It's that an initial point of data, an initial reference point, it can be a price, it can be an economic indicator, whatever it might be, it could be a line on a chart. It's that initial piece of data causes you to then look at all information after that with respect to that piece of data, whether or not you should. And what will happen is you become fixated on that initial price. Maybe it's the first price you traded a stock. Maybe it's the price it was looking at when it sat down. Maybe it's the price that it was trading the last time it had earnings, whatever it might be. And then you see all of your decisions and everything after that through the lens of that initial data point. Now, why can that be trouble? It's troubling because it can cause you to skew away from more important information that comes after that fact. If you become anchored to an initial price, an initial idea, you're going to end up not only missing out on opportunities if a stock is trending, because you might get anchored to a bid that you thought was going to be the bottom. You might also end up just getting flat out anchored towards a direction because you can't let go of one of those reference prices. So I'm going to give you an example here of something that affected me this morning here on AMD. And it's the worst thing you can do, we always talk about this, is trading against the trend, right? If you're not going with the trend, you're going to put yourself in a bit of danger. There's no question about that. I think everyone can understand that concept. However, the last few days on AMD had a very, very clear level that was absolutely gold. It was underneath the 179. You can see for 4 days in a row, you had a big short day with shorter highs failing around 79, failing, making another top, and then a lower high in there. Hey, you know, the 179 is a good short. So every single day that it gets into that price, it gets to that price, and you're thinking, okay, I want to look for the short opportunity on an AMD. You're anchored to that price. So what ends up happening, and you guys can obviously tell in hindsight that if you break a resistance zone, you're now breaking out and going higher, right? Like, that's easy to say. At 8:30, you had an economic number come out that immediately put the short on in that price for me. It ends up stopping out a couple of times, one successful pullback in there in the mix, but really nothing better than 70 cents to a buck when the move up had been $4. So really, it wasn't even that good of a pullback at any point. Once it broke away from there, I was anchored to the 79. So I was like, 79's the level, you short down there, short 78, short 78 half. When it broke away from 179 and started accelerating, when the market opened up here, you're breaking 180. At that point, I'm thinking, oh, previous resistance, it turns into your support level. You can't be long unless I'm long down there. That's where you got to have that long off of. So I would not consider flipping because as far as I was concerned, it was trading too far away from the breakout price. Now the problem with that is, what happened when we had economic data? You had jobs data, you had inflation data. The market shot, the market held higher, the market broke. If you were simply looking at a normal trading pattern and not enamored with my first entry and first fill price, you'd say to yourself, nothing about that stopped being a long break. And even when it got to the next resistance, the 52-week high came and I tried shorting that as well. Okay, fine, it ended up working the second time, but that doesn't matter. The point is I was staring a clean uptrend in the face, but I was anchored to an original price that I was never going to get to trade again. I was never going to be able to long off that level because I just simply was not going to be able to recreate that in the past. So, it's not just about whether anchoring is going to cause you to lose on a trade. It's going to happen at times. It can cause you to miss an obvious sort of reverse zone. Bias is one thing, liking the short, but if you get anchored to a really key price level, you'll find yourself, when it trades away from it, missing other opportunities. And sometimes missing other opportunities is a bigger deal than taking a hit, because hits are a part of the ball game. I was looking short off 79. I was going to lose on that trade. There's no questions about it. It came into that price. The stock decided to go higher. You cannot do anything with that. And the other thing that can happen when you get anchored to prices is you start trying to get a little bit too fancy with your trading. And I'll give you another example here of CRM. CRM in our morning show, anyone would have heard me say, once it holds 300 at the open, I'm going to be looking for long trades. Okay. So I was enamored with way too many chip names. You can see very clearly it tries to hold 300, can't do it. Tries to hold a consolidation there, immediately starts falling back under. This is where it holds the $300 level. So 300 is a round number that happened to be on light volume in pre-market, a bit of a pivot spot, resistance, and then a breakout. And it's a nice round number that psychologically is a big one. But the actual hold over 300 occurred bouncing off 301 and breaking back out 302.5. So in this particular case, anchoring brain says, well, you can't go long at 302.5, 303. You like 300. That is not a relevant point. It's just a number. What you're looking for is strength or weakness and direction for the stock. When you get anchored to a number, you then don't pull a trigger on a trade because you're not getting long at 301. I'm not getting long at 300.5. I'm not getting long at 301.5. I'd have to be taking the long at 303. But what difference does it make whether I'm taking a 303 long and giving it to 301, or I'm taking a 301 long and giving it to 299.5. Whatever it works out to, it's about the same thing. It's the trade that's in front of you. But if you start getting fixated on the number and the price, you miss the pattern of the trade, which is more important. Trades are about setups. And the setup can happen regardless of the number that you happen to be staring at on a chart. And I do this all the time. That's why I want to bring this one up, because it is a difficult one to get away from. You ever wonder why when you're in fantasy football, some guy's never going to give you an offer? He's going to wait for you to give him an offer first because he wants to anchor you to some ridiculous price that you initially put out there so that they can take advantage. Put it in your head, and then he's going to start messing with you based off the first thing that you had in your mind. Because when we pick a point, our brains are going to want to be fixated on that point that we initially picked on. And if you cannot get away from that as a trader, when the market gets away from it, you're going to miss opportunities, you're going to average into losers, and you're going to miss lots of trading P&L to the upside, both by losing where you shouldn't and by missing trades where you should be joining that trend. So the real deal is you've got to avoid anchoring. It is a horrible cognitive bias that every single person at some point in their life you're going to fall for it. As a trader, all you can do is spot it. And the good news is it's usually just about a number on a chart that you're fixated on, either a round number price, a line on a chart, or an initial price entry that you might have had on a trade. So you have to be able to step back, reassess it based on the pattern and information you're seeing in front of you. Don't anchor. That's a horrible cognitive bias, and if you want to get rid of it, you've got to be diligent and patient. As always, that's the real deal in your lesson of the day. Avoid anchoring.